All right, here we go. Hello, everybody. Welcome to your Thursday edition of the TraderMerlin Show. Hope you had a great trading session out there today. Nice little whipsaw based off some macroeconomic announcements, some PPI news, which surprised me. But we'll forego all of that stuff and jump right into business here, as both Brendan and I have some stuff we got to get to. So we'll start things off with a little futures and spreads discussion. Of course, we've got none other than Mr. Brandon Wendell joining us from the great state of Florida. How you doing, Brandon?
I'm doing great, Merlin. Thanks for having me back.
Always a pleasure. It has been too long. I don't know why it's been so long since you've been on the show, but here you are.
Yeah.
What's new in your world? What's been going on?
Just been busy doing some workshops, and actually I got a free workshop I'm doing tomorrow, kind of an overview of the markets, and just looking back. Oops, hang on a second. Yeah, there we go. Just kind of looking back at 2021 and actually going to look forward and seeing what's going on for this year. So if anybody's interested in joining me, I can put in the chat in a moment the link for that. But you can also get a hold of me via Twitter. That's probably the easiest way to get a hold of me is at TraderBdub, so you can get all the info there. But I've also been busy teaching my Wealth with Spreads program, which is where we're teaching future spread trading, which is kind of a niche type of way of looking at the markets from a different perspective, and of course my e-mini think tank as well. So keeping pretty busy altogether.
Yeah, and getting interested in crypto, I think.
Yeah, I've been following a lot of crypto. Actually, I've been recently I got motivated to start doing a weekly video on YouTube and the links again are going to be on my Twitter account. So I do a weekly kind of an overview of the many different markets, many futures as well as the crypto markets, as I mentioned. So I'm doing that too.
Well, they've been blowing through demand levels. We'll see if some of these ones hold. So let's start off with your kind of thoughts on, I guess, things you've been trading. What looks good for you so far this year? What are some interesting futures markets that you've been trading?
I've been focusing a lot on the short term right now because if you go out and look at what's going on in the S&P, the big question is, when is the big crash coming? Is it happening now or is it going to be happening? Let me go ahead and see. Let's see. Looking for the right app here. I was going to share my desktop with you.
Alrighty, we'll let you do that.
There we go. Share screen. And not Skype. There it is.
Yeah, it's that multi-trillion-dollar question is when, right? Everyone keeps thinking it's going to be going down.
I know, right? When's the big crash coming?
Right.
So, we take a look. I think you can see my screen now.
Yeah,
right?
I got you. Yep.
Okay, cool. So looking at the S&P, we want to look at the big picture first to kind of get an idea of what's happening here. On the weekly chart, we're still bullish, but we have what is called a negative divergence. And that was very concerning. You see that the market was making new highs, but momentum indicators, including this RSI, are actually moving downward. If you're making new highs in price, you should be making new highs in momentum. And without doing that, that's a warning sign that the markets are getting top heavy and getting ready to drop. So then we drop down to the daily time frame, and two things. One, you see the negative divergence, but actually what's happening now is we got confirmation today. This is kind of interesting. I didn't even notice this yet. But looking at what happened, typically in order to get a reversal, you need to get a warning sign followed by a confirmation signal. And there's several different ones out there. I'm not going to go through all of them. But the warning signal is here. That's the negative divergence, where, again, prices made a new high without the momentum backing it. Then what happened was today, specifically, as soon as we broke and made a fresh low on this candle, compared to yesterday's candle, we made a lower high and a lower low. The key thing there was we could not get into bullish territory on the RSI. So the fact that we made a high with the RSI below 60, 60 is the cutoff there for the bulls. So the fact that we made a high below 60 after a divergence, that's telling us that we are going to make new lows coming up. That is it. We are moving down. And I actually tweeted this out on Monday or Tuesday. I can't remember when it was, but I said we're going to get a rally for a couple days and then it's going to die off. So, if you go take a look at, I'm kind of bragging a little bit, but it's what we do. I mean, you do the same thing.
You can brag. Brag all you want.
Yeah. No, but you do the same thing, looking at the markets and just analyzing what they're telling you. So if I go to my profile here, like I said, going back to, I think must have been Tuesday the 11th. And 12th, 11th, there it is. Nope, that was Bitcoin. Again, I do some crypto right there was. So there may be a small bounce after initial selling this morning. Do not be fooled. The larger time frames are still bearish and the rally may not last more than a day or two. So that was on Tuesday. Here we are on Thursday, 2 days later, and there's our drop right on cue. So I'm thinking this is the start of some more bearish activity to come over the next several weeks. I don't believe that the low that we have right here at 45.72 will be able to survive this move down that we're currently in. And as a matter of fact, the next daily demand zone is way down here at 43.54.
Yep. Yeah, so, that's the spot I have as my target as well. I mean, and it's interesting. You look at how far down that is. Like from a percentage-wise move, guys, off of the high down towards that 43.30, 43.40 mark. That's your 10% drop. So it could be a double-digit decline here in the first month of the year in very short order. But I think you still have a couple obstacles to get through. You see that low there at 45.72. You have some little those ones over there as well. Yeah. Not that they're strong, but it still has to get through that stuff.
Right. Oh, of course. Yeah, there's still buying pressure. I mean, this was the origin of the demand. This was a test of it, but there are still leftover buy orders potentially and some buying pressure in that area, just in the unused portion, which will not snap to. There we go. 45.20, 44.85. So, yeah, we'll get some stair steps on the way down. It's not going to be like a waterfall, just huge drop, but, we're going to get these lower highs and lower lows as you do in a downtrend. And there's going to be great opportunities. You go into smaller time frames. You just look for the selling opportunities at supply. Mm-hmm. I was actually surprised that we didn't make it to the 4-hour zone right here. I thought that's where we were going to hit. But you also have to realize that these markets are related to each other. And when you take a look to see the 4 equity markets, you also got to figure out which is leading us. So right here, I've got a comparison chart that I use quite heavily. Let's go to a daily time frame. And basically, if you were to go back to December 20th and you see the rally, the leader at the time was the NASDAQ and the Russell. And when the NASDAQ gave up, that was our first warning sign. And then when the Russell finally gave up, you just see everything collapse.
Yep.
So right now, if you want to know where the bottom is going to be put in, you got to take a look to see, okay, we're dropping now. I think it was from the 4th. And the leader to the downside is actually the Russell followed by the NASDAQ. So we were just looking at the S&P. That's actually the wrong market to look at. You want to follow the leader. So if I were to go back to the Russell, that'll give us an idea of where we might bounce rather than the S&P itself. So again, RTYH 2022. And just bring that up. So looking at the big picture here, again, weekly, that's pretty bearish as well. Now, we don't have as much history because I like to go to the continuous contract. It doesn't matter.
It's still 2,100 on all of them. I mean, the 2,100 mark is like, it's been there since January of last year. It's crazy. Yeah, January of last year.
Yeah. So overall, I mean, this has been bearish for quite some time, and it's usually the first market to fall. The key thing is that we have not gone below 40 recently. So since this decline has happened, we're still staying above 40. If we go below 40, then we're going to drop pretty quickly. And as far as targets, I probably should bring up the continuous just to see where we might be going to. And on the daily time frame, yeah, we've been in this range for a while. We do have demand just under 2,000.
Yep.
So that's what I'll look for any kind of meaningful bounce on the equity markets is if the Russell comes down to that area. Whoops, I got that out of the way. There we go. You can see we're near the bottom of our range, but we're likely to break through this range and go down at that 2,000 level now. So we'll see what happens.
Yeah, it's funny. I have the same levels marked out on mine. We've been talking to a lot of people on this show have been taking that range-bound Russell trade because everything else has been just looking phenomenal and making new highs, and here's the Russell just traversing sideways, doing pretty much nothing. I'll show the viewers. This is how I have it mapped out, but there's the yellow box that is just sideways for the longest time. So if you're looking at that as maybe your canary in the coal mine, which historically that's what it has been, although it's kind of shocked me that the Russell has done literally nothing for the last year, just exactly a year. Is it that moment where you break down below, let's say, 2,100 on the Russell, and all of a sudden you start to position yourself and say, okay, this is the lead dog, at least for now, to the downside, and now I start to position myself in those other futures products?
Sure. I mean, you can pretty much ride almost anything you want, but obviously, typically you want to take the leader because that's the one that's going to give you the best return. It's interesting, though, because like I was saying before, these are all related to each other. So not only can I look to see what's going on with the Russell, but I can actually see how the Russell's performing in relationship to another security. So in fact, one of the things I do look at, and I mentioned this, I focus on spread trading. So let me go ahead and share my screen once again. I shouldn't have turned it off, but there we go again. And what I can do is take a look at perhaps, let's go back over to this comparison chart first and see that, okay, if you want to, you can short the Russell or you can short the NASDAQ. I mean, you're spending tens of thousands of dollars to short overnight, which is not bad if it works out really well for you, but you can get a better rate of return by doing a spread trade. Notice that right now the NASDAQ and Russell are dropping, but take a look at the Dow. It's been holding up much, much better, right? So there may be what's called a spread opportunity here, where if we know that that's likely to continue, what you do is you buy the Dow and short the Russell or short the NASDAQ. And the way that looks is something like this, where you basically create, I'll do YMH 2022. And I'm going to do this as what's called notional value. I'm taking the market value, which is what you see on the chart, and multiplying it by the point value. And that gives you more accuracy when you're looking at these types of trades.
Right.
So
the Dow's $5 a point. Yep.
Right, $5 a point. So that becomes the notional value of the Dow rather than just the market value. And I'll use that versus, say, the NASDAQ. And again, the point value for the NASDAQ is 20.
Yep.
So now we got notional values here, and it's probably sometimes easier to look at it as a line chart than it is a candlestick chart. But there you go. And what you see is the distance between those two is actually getting narrower now. It's kind of interesting. I thought it would be getting wider on the daily chart, but it looks as though the Dow is trying to catch up by falling faster compared to the NASDAQ. Although that may change pretty soon. You can apply the very similar technical analysis techniques. You might even recognize little patterns right here, like a head and shoulders. I guess it look better this way. Right there. But yeah, this is kind of what I look at for trading opportunities. And the reason why I do this, again, there's the head and shoulders breakdown that would have been a great trade. And we're coming up to right now this area of supply. And we even have a negative divergence. This is looking pretty good. I might have a trade opportunity pretty soon. You can see prices are moving up, but the indicator's moving sideways to down.
Right.
So that's suggesting that basically the NASDAQ, or I'm sorry, I'm charting the Dow. Yeah, the Dow and the NASDAQ is going to be an opportunity to short the Dow and buy the NASDAQ as that spread changes.
And, you know, one of the things you mentioned in the past also has been that with these spread trades, the amount of capital outlay is significantly lower. Thus, I guess from a mathematical perspective, you are increasing your rate of return, right?
Oh, extremely increasing it. Yeah, I'm actually bringing up Trade Pro futures real quick because it'll give me the margins for the futures. It'll give me the margins for the future spreads actually pretty quickly. So as soon as that program opens up, you'll see it. But yeah, I mean, you can drop your overnight holding costs from tens of thousands to just a few $100s. Right. It's amazing how you can control that. Now you're reducing your risk, therefore you're also reducing your rewards. You know, but again, what you mentioned was really the powerful thing is that you're increasing your rate of return.
Right.
And it's quite dramatic. So as soon as that comes up, it'll take a moment for it to load up. But yeah, I love doing these spreads, and honestly, we've been doing pretty well. I can show you real quick. If we take a look back at, let's see, where's that spreadsheet? This was December's. We've actually closed out all the trades except for one. Oh, of course, it just popped up. Hang on. There we go. And that'll log in. But anyway, here are the trades I did for the month of December. And you can see what the trades kind of look like. If I zoom in here a little bit, you got gasoline versus oil, or that's euro dollars versus euro dollars, and gasoline versus gasoline. So you can trade different months against each other or different securities against each other. And what happened for the month is we did pretty well. We had, let's see, whoops, zoom out again and zoom back in there. Overall, we had, let's see, 17, 18, 19, 20, 21 trades identified. There's still one that has not finished yet. What's going on there with my average loss? That's not right. There we go. Anyway, you can see that with the trades, we had 42% winners, and overall did pretty well for the month. And the rate of return that's the key thing. The 33% rate of return for each individual trade, that's a lot higher than what you would get on individual directional trades on the, like just buying the NASDAQ or selling the future, selling the S&P.
Right, and again, the capital outlay, because I know some people are struggling to get capital to trade with. Margaret asked a good question. Says, do you need brokerage permission to trade spreads like with options? I know that there's some offer it and some don't, correct?
Right. It just depends on the broker. So again, you got to go with the broker that actually offers it. But no, you don't necessarily need permission. So, for instance, right here, we were looking at the Dow versus the NASDAQ. If we go to NQH22 for the NASDAQ, the margin for that overnight, you can see at the bottom, it says $17,600, right? Again, I can zoom in so you can see that. That's the overnight margin typically. Well, if we wanted to trade the Dow with this, again, YMH22, and we're going to do maybe shorting the Dow and buying the NASDAQ at the same time, you can see that my overnight cost, remember, we're doing both contracts, shorting the Dow, buying the NASDAQ, and that's only $10,780 for both contracts.
Right.
Not just the Dow, not just the NASDAQ, it's both.
Right,
So,
and the risk value dropped too. So the previous one, when he was just on the NASDAQ by himself, guys, the risk was like 4,000 something. This is kind of hedged a little bit, so you see the risk dropping on that one.
Oh, yeah, I forgot. Yeah, the risk value dropped down to $2,600. So the other thing I could do is this, MYM and MNQ.
Okay, the micros.
Yeah, do the micros, right? So we can reduce our risk even more.
So this one, did you go backwards on this one? Oh, you did it. No. Did you go short the Dow and long the NASDAQ?
I did the difference. Yeah, it doesn't really matter. As long as you have one and the other one's the opposite direction, so it doesn't really matter.
Okay.
But the margins will be the same, so it's only $1,000 to hold it overnight, and you can see the risk value is ridiculously low.
Right.
So you just need to have a brokerage that allows you to do futures spreads and recognize it. And there's many out there. This happens to be Trade Pro Futures. That's owned by a mutual friend of ours, of course,
right.
Trey.
Mr. Trey Lazara.
Yeah, so he does that. And there's definitely some great opportunities out there. I can go in to look at a lot of different securities, and overall, it's higher probability typically with the trades. So, again, going back to kind of my record for the month of December, we're already in a bunch of January trades. You can see that a lot of wins showing up there, a couple of no entries, but not that many losses. I only had 4 losing trades out of all the over 20 that we had for the month because, again, it's high probability and lower risk. So you won't make as much dollar-wise per trade, but because your cost of carry is so low, you actually work out better that way.
Yeah. And as a business side note for everybody out there, if it really depends on the firm that you're with. So, there's dozens of different futures brokers out there, but check the margin requirements because even at just a straight, futures contract, like let's say you trade the S&P futures, you go from one broker to the next, your margin requirements can change dramatically. So, I think as a business thing, it's important for us to check and see who gives us the best bang for our buck and functionality, platform, and service.
Sure, absolutely. Yeah, that's very important. And no, I didn't look at, somebody was asking if I looked at the NASDAQ by itself, and no, I had not, because remember that was the other leader. We are seeing weakness here as well, obviously, lower highs, lower lows. Same thing, though. The momentum is very bearish just on the NASDAQ. You can see we can't even get above 50, let alone 60. So this is suggesting that new lows will be made. And on the NASDAQ, as far as our nearest demand, it's down at 14,700.
Yep.
Right there. So, yeah, I'm pretty bearish on the markets as of right now. But again, I don't think this is going to be a giant crash. I think it's going to be very choppy, but an overall move to the downside right now.
Yeah, I don't think we'll see the crash until after we really get definitive. We are actually raising rates type things in another few months. But I think that the glory days of just nothing but all-time highs, I think that might be disrupted for now.
Yeah, it kind of seems that way.
We looked at the major market indexes. What are your thoughts on different commodities? I know you trade quite a full spectrum. I mean, we've had, especially like natural gas over the last couple of days, just been absolutely insane. You have a lot of different products that are moving significantly. Any trades in those areas for you?
Well, yeah, I mean, we've had some really significant moves to the upside in things like crude oil. So
may as well check out crude oil, right? Coming to those highs.
Yeah, and you can see it's just been ridiculously bullish. And again, I've done some videos. Like I said before, I do a video pretty much every week on these markets. So what we've been looking at is, you'd have to go back tens of years in order to find overhead supply, I believe, at this 85 level. The other thing you can do is just do projections with the Fibonacci's here and give you an idea of where we're going to see pauses. So right now on crude oil, we may not quite be done yet. You can see our impulse up, correction down, and we paused, and our next target really should be about 83.71 for the next pause. We're stopping a little bit early, and that's pretty typical because we've broken to new highs. Usually a lot of people start to get excited when you break out of highs and they try jumping in. The problem is that the pros don't do that. They'll shake you out. It's, the novices jump in late, so you get that shakeout, and we pull back below, and then usually move to new highs. Then people jump on board again, and the same process just keeps repeating itself. So what we see today in crude oil is really just a retracement. Sorry, let me fix that again. Where we had the breakout to all-time highs, the little bit of a pullback. So really what we should be looking at right now is another opportunity to buy. And ultimately, I think we're going to get up to that 83.71. We have plenty of momentum.
Yeah.
This is different than the equity markets where we were losing momentum. Here, we're gaining momentum still.
Right.
So if I drop down, I'm going to be looking for the buying opportunities on the pullbacks. And we have rally, base, and a rally here. So nearest, let me clear this. I'll just do it this way. I would say that on crude oil, we got a nice little pullback and a buy opportunity, perhaps at the 4-hour demand. Well, you may have already hit it.
Yeah, you're right there. Yep.
Yeah, 81.51, 80.92. You see that we kissed that area and started pushing back up already. If for some reason this fails, we could go down to the next level here, right around 79.38. But ultimately, I do think that we are still in a bullish move up to 83.71 before this is at least pausing again for the serious pullback. And I don't know. Let's see. Oops, wrong keystroke here.
I'm hitting the wrong keystrokes.
What'd you do?
I just put a nice video over your face. That's like or a picture of your face. We're good. It's a picture of you, so that's the good news.
All right. And it doesn't look like it's any better on the smaller time frame. So I would stick with that 4-hour zone there. But yeah, I was looking for more bullish opportunities. Just like I showed you, we have the trade opportunities I see on the spreads. I do the same thing with E-mini Think Tank, trying to find good trading opportunities there as well on intraday basis, as well as some swing trade basis.
Sure.
So let's take a look. I think Nat Gas was a little bit different.
Nat Gas is crazy. Nat Gas was like a 15% up move yesterday and came right back down today. Beautiful.
Right. Parabolic move.
Yeah.
There it is. Yeah, you go out on the 4-hour chart, you can see, we're just basically coming right back down.
It's so funny, Brandon. If you look at this picture, there's all sorts of things that every one of us do differently and we look for. One of the things I love is, you like RSI and you have a strategy behind it. You have rules, and I'll ask you a little bit about that in a second. But one of my favorite things is candlestick patterns. And on that rally, we had a natural gas yesterday, 3 monster green bars followed by a shooting star. And then all of a sudden, one small hesitation. And then right after it, we broke the lows of that shooting star.
Sure.
This is exactly what I was talking about the other day. That's my pattern. I love shooting stars and hammers.
Yeah, that's a price pattern right
Yep.
there. All you have to see is, okay, we got a top being put in, and it becomes a pivot high as soon as you break the low of that candle. That's confirmed.
Yep.
Yeah, you're absolutely right. I follow those things too. I don't necessarily look at the names of the candles, but I look at what's going on in price. And
Right.
really what I'm looking for primarily is where did you close in relationship to the high and low? Here we close well off the low. So if you get a candle like this, you're basically saying, okay, we got tons of selling pressure there. All we need to do is confirm that selling pressure by making a new low,
Right.
and we should be dropping. And of course, inverted hammer or shooting star, whatever you want to call it, gravestone doji.
Yep.
Right there, that was the confirmation you needed. You don't even have to wait for the close. You got lower high, lower low, and you're off.
Yeah, I love it. I just think it's one of those things where, you have, and I think you probably experience this as well as you teach classes, you have all different walks of life, and somebody may come up to you and be like, your RSI thing, that doesn't work for me. It's garbage.
Sure.
And then someone else will say, well, it works great for me. And someone else say, well, the candlesticks work great, or the patterns. It's like, we all find our thing and just develop that and make the most out of it.
Absolutely. The main thing is that you got to have some sort of a system that you can follow to build that consistency. There's not one single way to trade. Not one person is going to be always right. And we have to be open to realizing that, if something works for someone, then let them do it. It's fine. There's nothing wrong with that. You got to find your own specific methodology or way of trading the markets that you feel comfortable with that give you positive results, again, on a consistent basis.
Right.
And there's nothing wrong with looking at price action. That's the best thing to look at, I think, as well. So, candle patterns, I do look at them both, but I also use this as kind of an indicator to help me with momentum in addition to the reading of the price.
Right. Price number 1, patterns and technical support number 2. Let me ask you this question. This came in from, let me make sure I can get it here. Where's my, what is going on here? The tough part about trying to find a question, there we go. Mario says, I've seen him talking about negative and positive divergence on price and RSI. Are the lines drawn on the top or bottom of the candles, and the same for RSI? Not sure if it depends on the trend. So maybe you can offer a little clarity as to what you're kind of looking for or how you're drawing the lines for your RSI.
Yeah, typically if you are looking at a downtrend, then you're going to be drawing the lines on the lows, on the bottoms basically. And if you're in an uptrend, you're going to be drawing it on the highs, because that's really what you're looking for. So again, uptrend.
And again, let's be clear, everyone. This is, when he says this, this is not how you draw trend lines. This is how you draw lines to identify the weakness or strength of RSI.
Right, exactly. I mean, I use the RSI for a couple different methods in the markets. I mean, it depends on the time frame I'm looking at. So just to kind of take a step back here, remember, I always look at 3 time frames with every security. So we have our higher time frame, and I'm looking at kind of perspective, and I can use the RSI to confirm the curve. What's going on in the big picture, the field of play, if you will.
Right.
Then we have the intermediate time frame, and there I'm looking for trend. So basically the RSI here, and again, can't spell today. So the RSI here tells me, let me get that fixed. The direction of the trend basically does 3 things. So number 1, direction or trend direction. Number 2, strength of the trend. And I can't spell today.
It's all right. We forgive you.
Yeah, it's been a busy day. So, and then number 3, it'll also give you confirmation of trend reversal.
Yep.
And again, spelling. Okay, so then on the lower time frame, which is basically what I'm using for the zones, it'll help confirm zones holding. It'll filter trades, and that's about it for now.
There you go.
So it does a lot of different things for me. So anyway, yeah, it's not the same thing as drawing trend lines. So basically, if we are in an uptrend and I'm trying to figure out if we're getting ready to move back down, let me see if we have an uptrend here somewhere. Yeah, there we go. Perfect. So in an uptrend, as prices keep going up and up and up, and I want to know, are we going to drop? I need to see, as we are making highs, do we have the momentum to support those highs? So I'm always drawing it on the tops as prices are moving up. When you think about it, it makes sense. I'm looking at the markets going up and up and up. I want to make sure the momentum is pushing it up there. So these are kind of like bridge supports. And there's the bridge. The problem is the supports aren't reaching the bridge, and therefore there's nothing supporting it, and next thing you know, price collapse. So that's how I'm figuring it out on the upside. I'm looking to see, okay, where are we going to keep going? And if we see divergence where we're moving down versus moving up in price, then there's the problem.
Yep.
On the move down, let's see if we got one down here. I thought I saw it. As prices are moving down, I don't really have a good example, do I?
I don't see anyone out.
Yeah, but anyway, it's the opposite. Obviously, I'm going to be, oh no, here's one. So we have prices are moving to the downside. I want to look at those lows. As we were making new lows, we should be making new lows on the indicator. Remember, this is really just measuring momentum on the bottom. That's all it is. And if you're making lows without new momentum to the downside, then it's not going to be sufficient to continue that direction, and you end up getting that pullback or a reversal.
Right.
So the way I look at the RSI is a little bit different than the way most people look at it. To me, this RSI is measuring bullish momentum if you're above 50 right here, and it's measuring bearish momentum if you're below 50. So the further away from 50 that you are, the more momentum you have.
Right.
So that's kind of what I'm looking at when it comes to this RSI. So that's what I mean by the divergence. Let me bring in the bullish divergence. There it is. You saw. So you got them both there.
Yep.
Yep. So
that's the one. Nice. I'll let you tackle this question coming from multiple people. Is Brandon still teaching for OTA?
Nope. I'm not.
Well, you're doing some workshops, but not teaching classes.
Right, yeah. So I'm still with the South Florida office, just doing a few workshops with them, but I'm kind of not doing that anymore. And as I mentioned, that what I have tomorrow, as a matter of fact, you guys miss me and want to get together with me, I'm going to be doing this at Wealth Builders. So you can go ahead and join me. There's the link for it. I think you can copy that in the chat. I'm going to be doing something called Trading Coach's Playbook tomorrow at noon tomorrow. You can also follow me on Twitter to be able to get that info as well. But I'll be doing, I'm going to do an overview of 2021, but more importantly, I'm going to be doing a high level, looking forward to what's going to happen in most of the different markets, including the crypto markets as well. So I'm going to be looking at stocks, futures, Forex, pretty much anything we want to, and just giving you kind of, mostly futures, honestly, and a little bit of cryptos, but just kind of giving you an overview of what's going to happen for the next year based on what I'm seeing in price.
Cool, nice. Yeah, it didn't actually let I don't think it allows links to be put in the chat. Lori says, "Can you please show the chart with the printing?" Oh, I think you mean with the directions,
that's
Lori?
What I did right here. I just brought it back up, the chart, the bullish and bearish momentum, and then this is what they wanted.
So go give me the address again. You had it up. It was Wealth Builders. What?
It's a long address.
Well, what's just the main website? I guess they can go to your Twitter and get it.
There's a link.
Oh, it's Builders HQ.
If you go to, if you go to my Twitter, it'll be on my Twitter.
Okay.
Yeah, so just follow me on Twitter, and I'll put the link out there.
Cool. Anything else you want to share? I mean, actually, let me give you this one. So, or answer me this one. So, I with the viewers, we did a little thing where we said, all right, what's the S&P going to do when we get to the end of the year? December 31st rolls around. What are we looking at? Are we up 5%, down 10%, down 15%, up 100%? What's your call? Just doesn't really matter. It's just gonna fun. I'm gonna put you on a list.
Yeah, it'll be up, down, or sideways. I guarantee it.
Ooh, really? Come on, what's your value for the S&P?
Let me take a look. Actually,
as soon as you tell me yours, I'll tell you mine. And you're gonna laugh. You're gonna be like, "Oh my god, you're an idiot, Merlin." But it's okay.
Nah.
Anyway, you usually say that, so.
Let me see. Monthly chart right now, we got this huge parabolic move up. I honestly think this is the crash year, so I would not be surprised to see us close out the year somewhere. Let me see which one it's going to be here. I wouldn't be surprised to see it around 3,500.
Yeah, okay. It's a little lower than I thought.
Either that or this area, 37.
Yeah, so my thinking was we're going to actually get down 20% to test the bear market. Then the Fed will do whatever they can to bail it out, and we'll end up down like 10 or down about 15%. So it's 4,071 was my target.
No, okay. So you figure we're going to come back up a little bit there?
I think near the end of the year they'll try to bail it out, but I know it's a long shot,
I would, you know what I'm going to say right here? I'll say 39.50. That's about a 17.5% drop. I think we will bounce off the lows before the end of the year, so I'll say 39.50. You put me down for that one.
There you go. Done. Brandon's in. All right, man. Well, hey, listen, I've got to wrap things up because I got to get to an eye doctor appointment. But I want to thank you for. I know it's part of getting old. You know how it is.
Yeah, well, these are just blue blockers. I actually have good vision. I don't know, fortunately, but no, I know how it goes. Yeah, absolutely. So you take care of yourself.
You guys see? Here's the picture of Brandon. He doesn't need glasses in the previous one. He's like so young and handsome. Now there's the one. That's old Brandon now. And he does paint on that beard, by the way. It's painted on.
Yeah, right. Now, the only paintings I do are these. I got my new painting that it's kind of hard to see with everything, but I had the old bull and bear painting, and now that one.
I like it. All right, man. Well, hey, thank you so much. I appreciate you coming on. Take care of yourself out there, and hopefully we'll see you on, I don't know, give me another month or so. We'll come back on.
Absolutely. Love it.
All right.
Take care of yourself, and take care of everybody. See you soon.
All right. Take care, Brandon. Bye. Because it's Brandon Wendell giving us some insights into what he sees for the markets going forward. Obviously, just opinions and take it for what it's worth. But hopefully you guys enjoyed that. There was some good stuff in there with RSI and looking back at how to use RSI tactics, at least from his perspective, which, I'm always an advocate for learning as many different strategies and techniques as you can. If you want to know more about Brandon or anything to do with this show, you can always email me at TraderMerlin@gmail.com. That's the easiest way to get in touch with us. Now, let me wrap things up here because I got to get running. But today, I wanted to show you this. I'm going to start with this one. This was interesting because you guys might remember yesterday I was like, I have a feeling we're going to see CPI or PPI numbers higher than expected. And they're expecting it to go from 0.8 to 0.4. And I was thinking 0.5, 0.6, 0.7. We came out at 0.2. And that's this chart right here. As you can see, first time we've missed by this much in quite some time. Now, the reason I think this is important is if I go to the next image here, on the top you have Producer Price Index, which came out today. On the bottom you have CPI, which came out yesterday. And notice the cost for consumers of prices are rising, and the cost for producers is dropping. So real simple, ask yourselves, what does this mean for the market? If the cost of goods and services to produce them are dropping, but consumers are forced to pay more, who wins here? There's only one person who wins, right? It's pretty critical because I think this may be a factor for our upcoming earnings season. Because if producers are paying less for their goods and services but selling them at higher prices, that means that the producers' earnings are going to do rather well. So this might be setting up for, not this quarter, but next quarter's earnings season showing a bit of a pop. So I thought that might be rather interesting just to bring up and share with you guys. I find it, as a lagging indicator. It will take a while for that to filter through. But if producers keep paying less for their goods and services and you and I have to pay more, then therein lies the problem. Now, someone's going to make a lot of money in that situation. So let's go. I think I had this one here. We do have some announcements for tomorrow. There you go. You've got retail sales numbers tomorrow morning at 5:30 a.m. Pacific time. So that's 1 hour before the markets open. And a pretty heavy U.S. day, guys. You can see we've got retail sales, import prices, industrial production, capacity utilization rate, and there's more after the markets open. University of Michigan consumer sentiment, business inventories, etc. So a lot of good stuff, or at least announcements happening tomorrow, which can create some waves. But really the most important thing is it's the kickoff to earnings season. And now we have the monsters, the big dogs, JP Morgan Chase, Citigroup, Wells Fargo, BlackRock, and First Republic Bank, all reporting earnings tomorrow. So it's a big boot for the market. Who knows which way it's going to go, as we have been watching some of the ETFs out there. You have XLF in particular. Here is what financials have been doing. A little bit of a hesitation and rollover today, but that's pretty much what the markets did. But it feels like this is a buy the rumor, sell the news. And if you notice how much financials have rallied, man, it really feels like something's priced in here. So let's keep our eyes open for the markets for tomorrow. I think you could have a lot of action and swings in the financial sector tomorrow. We need more data on it, a small pullback and uptrend on PPI. Yeah, it's really not that big of a data set, Big Ab. I'm definitely not saying that this is the end, but it is interesting when you see things diverge that much. Generally, someone's going to win there, and in my mind, I'm like, okay, who wins, and how can I capitalize on that? So that may mean on our next earnings, we get a nice little pop up, which could push us through those all-time highs, and then we start to see things fall apart. Okay. That's going to do it for me, everybody. I have to run. Tomorrow is, of course, our Friday show. Hopefully my sinuses won't be driving me nuts. If you have any comments, questions, feedback, things you'd like us to cover, you can email me at TraderMerlin@gmail.com. Of course, TraderBdub. I'll put his name on the screen here. Let's see. Let me bring up the picture again so I can put his screen name on there. All right, and here's his lower third. So if you want to get in touch with him, there it is on your screen right now. You have, he's at Twitter. It's at TraderBdub. TraderBdub. That'll do it for today's show, everybody. Hope you enjoyed it. Hope you liked some of the stuff Brandon was talking about and learned some new things today. That said, happy trading, and I will see you all mañana. Take care.